Imagine waking up one morning and actually seeing your mortgage payment jump by $600 a month, just out of nowhere. That's exactly what happened to someone who recently actually reached out to me. They weren't even my client, but they needed help actually understanding why their payment just skyrocketed overnight. And when we kind of dug into it, we actually found the culprit, an escrow shortage. So their lender actually never warned them about what would happen in the future. I'm Stephen Brock, the brutally honest loan officer, and if you are a homeowner or planning to be one soon, listen up because this could actually happen to you, and it actually happens to everybody. So today we're breaking down escrow shortages or an escrow analysis and why they happen and how to avoid actually getting blindsided by that mortgage increase. So what is an escrow shortage? So if you have a mortgage, you most likely have an escrow account. Each month, a portion of your mortgage payment goes into this account to cover property taxes and homeowners insurance. The lender then pays these bills on your behalf when they come due. But here's where things actually usually go wrong. If your escrow account doesn't have enough money to cover those bills, your lender will increase your monthly mortgage payment to make up for the shortage. And sometimes it's not just a small bump up there. It's hundreds of dollars. The biggest escrow shortage culprit out there is property tax adjustments. The most common reason for those escrow shortages, especially for new homeowners, would be those property tax adjustments. So here's how it actually happens. When you buy a home, your initial property tax assessment is often based on the previous owner's tax rate. After the sale, the county will reassess the home based on its new market value. It usually happens when the owner owns on January 1st, and it'll be much higher. The new tax bill gets sent to your lender and yourself, and suddenly your escrow account is short thousands of dollars than what it was expected. The kicker, as this reassessment can happen, they can happen up to 2 years after you close on your home. So catching many homeowners completely off guard if they're not prepared. So how do we actually avoid that shock? So if you want to avoid it, having that surprise in your mortgage payment, here's what you actually need to do. One, know your true property tax bill. So before you buy a home, check with your local tax assessor to estimate what your taxes will be after the reassessment. Don't rely on the seller's tax amount. It's likely outdated. Two, watch your escrow statement. Your lender sends you an annual escrow analysis statement, usually at the beginning of the year. Read them. If you see a shortage coming, prepare for it before it actually impacts your payment. And three, keep a buffer fund. Many lenders only collect the minimum required for that escrow, which means even small increases can cause a shortage. So if you can, set aside extra money in case your taxes or insurance increase, and then you can just make a lump sum payment. So the bottom line is just stay proactive. The homeowners who actually reached out to me were blindsided by their payment jump. But you don't have to actually be that way. Understanding how the escrow works and planning for that potential tax increase can save you from a financial headache down the road. So, has your mortgage payment ever actually increased unexpectedly? I want you to drop a comment below and let me know what your experience was. And if you just want me to look over your mortgage statement with you to see where the shortages might be, and if it is an escrow shortage, let me know. I'll send you an email and we can look over it together.